And in terms of timing, like, what would be a good time for startups to go public? It seems like, you know, with all the public money coming down to the private sector, looks like companies are staying private longer.
Yes, they are, and you know, I think it's still a little unknown how that plays out and what happens eventually. It's not so much timing to go public, I would say more readiness. So the kind of prerequisites to go public in the modern world, which is very different than it was, say, 20 years ago, are one, you have to protect yourself against activist shareholders who have very, very short-term goals for the company. So if you're a technology company, you have to be able to invest in new products, or your product cycle is going to run out and you're going to die in really 7 years or less. But if you don't control your own stock, then you will not be allowed to do that because your investors won't let you today. So you need two classes of stock. That's kind of the first thing that's required to at least be public in the US. And then the second thing that's very, very important is you need either kind of some combination of a very big cash balance and or positive cash flow, because the dynamic of the stock market is very tilted towards investors and away from the company. So if somebody is trying to kind of short your stock and take it down, it's very easy for them to put out information that might not be true, that's very negative on the company with no consequence. It's very difficult for you to defend it due to regulations like Reg FD, where anything that you say has to be said to everyone at once, and there's incredible restrictions, and you can be sued very easily. So if you're losing money and the short sellers know that you're going to have to do a secondary at some point, the stock price will always be pinned to a very low number, and that's just not a good situation for anyone.